Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Mike Peltier. Mike is the COO of VCU Investment Management Company, which supports Virginia Commonwealth University and its related entities in Richmond, Virginia. VCU is pioneering what it means to be a public research university while remaining focused on innovation, diversity, and access in the Commonwealth and beyond. Mike shares lessons learned from his audit and tax background, which helped him lead the operations of the investment office. We discuss the key pillars of the tech stack and some unique ways to leverage common technology to create efficiency. Mike discusses AI use cases you can use today that reduces the friction with investment and operations teams of all sizes. We then turn to outsourcing service providers and the importance of building personal networks to stay on top of an ever-changing industry. Please enjoy my conversation with Mike Peltier. Mike, thanks for joining me today. I'd love to hear how you got into the investment management business.
I started my career in public accounting. When I originally came out of school, I went to a small regional firm in Charlottesville, Virginia. One of the benefits of being a small firm was that I got a mix of audit, tax, and business valuation exposure. And in that, I had an audit mentor and a tax mentor that was assigned to me, both of which, after I was in public accounting for a couple of years, had left to go to work at different OCIOs, one of which was Investure. And she ultimately recruited me to come to Investure sometime thereafter. So that was really where I got my start into investment operations.
And how big was Investure at that time?
So when I joined, from a headcount perspective, there were two other individuals that joined the same day, and it was a 10% increase in headcount. So we were 30 or so when I joined. When I left, I would guess probably 40, 45. And then I think they may have grown even more since then. It was roughly 12 billion in assets at that point in time as well.
And what was your role there at that time?
So I was brought on very specifically to serve in a role that would help address the management company's books and records. And one of the things that was really great about Investure and the culture that Alice Handy had instilled there was they really empowered everybody to try to contribute to the business and were really supportive of when they saw initiative and trying to reward that. So I came on doing the management company books and records. I was interested in investing, not necessarily personally investing, but just in the whole atmosphere, continued to just express interest in different areas. So my role just continued to grow. Really, every 9 months or a year, I felt like 50% of the things that were assigned to me would change around and expand. And so that was really, really great experience in doing that.
Coming from the audit side, what was the biggest difference being on the inside working at an organization like that?
Oh, that's a good question. I think as an auditor, you do a lot of the same work. So for me personally, that was one of the things that wasn't super appealing about being an auditor. You could probably make the same argument that happens in investment operations. But one of the things that I really enjoy and find rewarding in this business is that not only are there always new things going on in the operating environment, but you get to hear from some of the smartest people, the investment managers and the folks on the investment team, and you just get to learn about so much more than you would be exposed to if you're just focused on auditing XYZ company and you're doing that same audit year over year.
Having that context and you understand the manager, you've spoken to the manager, I think there's a massive difference between that and looking at a line item and work papers on that. How long were you at Investure?
So I was there from 2013 to mid 2018. So one of the things that in my expansion of my role culminated in was the last year and a half, we went through an evaluation of our tech stack and the service provider relationships that we had. And really that culminated in having an RFP performed for fund admin. So at the time, Investor had different funds that they were managing. They had different fund administrators that they had for different fund vehicles. And that created complexity from a reporting standpoint, consolidation standpoint. So part of the thesis for the RFP was let's go find best in breed for both fund admin, but let's tackle some of the other additional services and things that we need to help support the business. So reporting and analytics, treasury function, document management, all of these things could fall under fund admin to where you're really trying to consolidate a lot of that and get some efficiencies there.
Now, there's a lot of moving pieces. And how do you think about the interplay of that?
So I think the way that we thought about it at the time was let's have a scorecard where when we're evaluating everybody, we've got different functional areas that we're trying to evaluate. And then let's look to see who can address these things. And do we think that they have the technology to really support? Because there's one thing to hear it in a sales pitch. It's another to actually be able to execute on it. So we were spending a good bit of time evaluating the options, making a selection, and then working on implementing that.
In your mind, what are the pillars of a technology stack?
It's like the accounting book of record, performance book of record. Well, somewhere in between is your liquidity management, your performance management, your exposure management, all of these things that play into overall the investment team's ability to manage the portfolio and understand the risks of the portfolio.
Now, this is an interesting area for you guys to undertake a large project like that. How did you go and score that?
We had started with, I want to say 5 or 6 that we looked at. We narrowed it down to 2 or 3. And I think between those, there was pros and cons of some of them were much more high touch, but had a much lower technology spend. Others had the technology spend, but they also are maybe a little bit lower touch because they're the large providers that are out there. So trying to figure out which one of these really fits the identity for Investor and which one is going to be best suited to address our needs and really upgrade the solutions that we had at the time.
And then from that experience, what do you take away from that? What do you carry with you forward to VCIMCO?
One, it just gave me a ton of exposure into so many different facets of investment operations that I use every day in my role here. But I think beyond that, when you're doing diligence on these things, you could analyze it all day long, but at some point you've got to make a decision. So I think that was one thing that I learned from that experience is that at some point you have to trust the process that you followed and then work on execution as opposed to, well, here are the potential pitfalls of what could go wrong and trying to address every potential outcome. So that's one. And then the other is really that there's not one size fits all. And so pivoting as you're going down, and this is something that I see all the time where somebody will come with an idea and my default reaction is, I don't know if that's a great idea, but it's constantly reminding myself, let's keep an open mind about this because there's more than one way to do it. And I think that's been really helpful, even though others might say, I still say, no, it's not a great idea.
So fast forward from there, you were an investor for a little while. And then what was the next stop for you?
So when I left Investor, my wife and I were trying to relocate closer to Richmond, where we are now. So I left and I went to work for VCU Health System, the Virginia Commonwealth University's health system as a treasury director. So there's the university, there's the health system. The university is a public institution. The health system is a political subdivision of the Commonwealth of Virginia. There's some overlap at the highest levels. There's overlap there as well in training and providing patient service. It was totally new working in healthcare for me, but was also working closely with the team here. So I had some of the elements of the things that I was familiar with, some of the things that were really exciting and new to me. My wife is a nurse. I also got to see the other end of the spectrum from the clinical environment. So that was really interesting. Ultimately, while I was in that role, I learned of the opening here coming available and really wanted to be back in investment operations. So pursued the opportunity and here I am today.
Give me an overview of VCIMCO.
So we were founded in 2015. The president of the university at the time, I think, looked out at other similarly complex institutions and saw UVA, UNC, some of the other large reputable institutions creating their own investment management companies and having success. So Nancy Everett was our founder. She was on the board of VCU at the time. So he approached her and said, hey, is this something we should consider here? And when she learned the size and scale that we could have, said, absolutely. So the rest is really history from there. Nancy retired at the end of June from VCIMCO, but she really did so much work in getting us to where we are today in terms of getting through those initial conversations, getting the setup right, making sure that all the stakeholders are at the table. So we're really grateful for that.
And were you there when they were building it from scratch?
I was not there when they were building it from scratch. So I missed the beginning couple of years. I was there from the health systems perspective on seeing the benefits in some of those earlier years. And then I joined here in 2020 And since that time, I've really gotten to see it just continue to increase.
What was it like when you first arrived from a headcount tech and compared to where you are today?
So when I joined, I would say headcount was pretty similar. I had the luxury of I didn't have to go through that initial setup and implementation for a lot of the major providers. There's a couple that we've made tweaks to along the way, or we've made changes to. But overall, the big players, custodian, that relationship was already there. Our fund administrator, that relationship was already there. We've added some other services since then. When I joined, we were in the process of implementing a shadow book and record for our investment book and record and bringing on an external service provider to help us maintain that. And I fortunately was very familiar with the outside provider. So that's been really helpful as well.
So you have custodial book of record and then really trying to create a shadow book for investment book of record, or was it something else?
It is not intended to be a pure accounting shadow, but it is an investment performance shadow. So there's nuances that I'm sure many people are familiar with about beginning a month, end a month, and the ways that you calculate performance. Is it a leap year? Do you have an extra day to really get in the weeds? So there are reconciling differences when it comes to things like that are known and expected. But we do use our investment book of record as a tool for both a workflow management in terms of we get a capital call. Part of the process is then to set it up with the fund administrator and the custodian in order to execute on that call, but it's also to track it in the investment book of record. So there's a maker checker process that goes into that helps us make sure that everything stays on track and gets completed on time. And then in addition to that, at the end of each accounting period from the fund administrator side, we can use the investment book of record to reconcile and say, yes, we agree with all the valuations and move on from there. I've seen some places where they do much more robust, where it is truly a shadow accounting book of record. That feels like it could be a little overkill at times for what our purposes are. But what's really important is the valuation. And that is what is super critical to get right, both when we're doing our interim reporting and when we're providing flash reporting, as well as when we're going through our annual audits. So the process that we have today gives me a ton of comfort that there's not going to be any surprises when we go through that.
On the specificity on headcount and assets, can you give me an overview of where you are today?
So we have soon to be 8 full-time employees. We've got 3 interns currently. We have usually a rotation of interns throughout the year that we use that are super helpful. They're always VCU students, and they're always hungry and willing to get their hands dirty. And so that's great. And then assets, roughly $2.2 billion.
And then every COO role is a little bit different. What are your areas of responsibility, accountability?
So I would say, broadly speaking, is everything that is not investment decision-making in some capacity. More specifically, that encompasses HR, because we're a separate institution from the university. That encompasses operational due diligence, vendor management, compliance, legal review, and some elements of partner relations as well.
And then you don't have outside capital, so you're not registered like a lot of organizations. What does compliance mean for an organization like VCIMCO?
For us, despite not being registered and not having outside capital, we want the partners to have the comfort to know that we were designed and intend to operate similar to how you would see a registered advisor. So we have a compliance policy that has limitations on your personal investing that you can do as an employee here. So we partner with an outside vendor that helps monitor that for us. But ultimately, I review and pre-approve if someone has a potential trade that they want to make during the course of the quarter. I will pre-approve that. And then the outside vendor helps monitor to make sure that all the trades that are executed were pre-approved and appropriately kept in.
So is that pretty typical within organizations like VCIMCO?
I think it is. I think similar to like ODD, you have different levels of what's acceptable and what's not. Can you trade ETFs freely when they're broad-based, things of that nature? Or is it just specific strategies? Since we have a generalist model and we're really evaluating everything, we've just taken the stance that anything that is not broad-based ETF exposure typically needs to be pre-approved.
Maybe to talk a little bit about your tech stack. You've got your outsourced, you got your service providers, but just what does your tech stack look like today?
So today we have, from the service provider standpoint, Northern Trust is our custodian and administrator. Our investment performance book of record is Solovis. Ex Officio is the outside provider that we use to help us keep lean and nimble on the operating side. And then we've recently hired LP analysts to help with monitoring the underlying risks and exposures within the private portfolio. So with them, we've only had them on board for a couple of quarters, but that's been pretty seamless transition and really additive to what we were doing before was largely manual to help monitor that. So it's that plus so much more detail than what we could have handled internally.
Being a lean organization, so when you're looking at LP analyst or something like that, and you're doing a manual process, at what point did the light bulb go off and say, you know what, we should really get some software to help leverage this?
Our approach to any new technology that we're evaluating is what are the pain points and how can this be additive to the process and what we're currently doing today? So there's one thing if it takes what's a manual process and is time consuming and frees up some time on the investment team and the operating team. So there's some real value there. But if it can do that and it can also add to our ability to further analyze the portfolio better and to have an even better sense of what those risks are, then I think that makes that leap that much easier.
How do you guys keep track of all of the things? Does your investment team, are they aware of all the tools that are out there in the market, talking to their peers? How does that information flow work in order to actually identify some things that may help you?
I think a lot of the time it is the investment team has exposure to it through peers or they've demoed it at some point in the past. So it's really important for any new technology endeavor that you have adoption. So I don't take that lightly. If they've identified something that they think would be really helpful, I'm really fortunate in that I have a great peer network that I've been able to tap into. So sometimes somebody will come with an idea and then I can go quickly evaluate, is this worth spending more time on? Or is there resounding feedback that, hey, this is great in theory, but it doesn't really work the way we anticipated? And that has been really powerful, both on evaluating new technologies, but also in really evaluating all kinds of nuanced new things that might come up in the realm of investment operations.
And then we touched upon this when we were game planning for this conversation about being nimble with what you have. And you talked about the way you use OneNote. I'd love to explore that because it's a nice use case that's right in front of us and available to everyone as they try to figure out where we go next in this world.
So one of the things that I think is maybe unique in an area of focus in the coming year or two is we don't use a CRM, where most of our peers, I think, use one now. So we've largely addressed that from a note-taking and manager meeting notes perspective by using OneNote. I think that has worked fairly well. We're starting to see some of the pain points to why that's an area of focus and a priority. But being Microsoft clients, we've really leaned into, okay, what can we utilize within Microsoft to really get the best bang for our buck? So we've adopted Copilot in the last year as well. One thing that we are doing is we're using it to record internal meetings and manager meetings where they've agreed to do so. And I think it really is helpful. It's not always perfect, but it's really helpful to have a summary and a transcript that someone can use to then go quickly after they come out of a meeting, write their observations, send it around to the team, as well as allow them to be more engaged during the meeting. So instead of trying to take notes while they're trying to be engaged and having a conversation and asking thoughtful questions, they can really just let Copilot handle that piece of it.
And how are the managers taking that? Do you feel like we'll eventually get to people just being totally fine with full adoption on note takers?
It depends. I think there are certain managers that are much more protected around their information who are always going to feel uncomfortable with that. I would say when I've used it for my operational due diligence calls, no one has said, no, I'm not comfortable with that. I think everybody completely understands and is sure, that's great. Similar to the shift of being in person versus being remote, I think as people get comfortable with it and see how it's utilized, more and more folks will be open to using it.
Are you integrating it with other pieces of data?
Not currently. One of the things that we wanted to do is really think about how can we be efficient. So I think there are other AI tools that are out there now that we've looked at, some of which we haven't pulled the trigger on yet, but I think they still have a lot of potential. It might be something that we pursue further, just in terms of helping us with preparing for meetings or helping us with gathering some of the data, doing some of that analysis. Take document management, for example. When I went through the process with Investor of reviewing our document management process, you don't really appreciate until you're in the weeds of it how difficult that is to do well, especially when you think about you've got a relationship with a manager that manages several different funds that you're invested in. they send a communication out that's manager specific and therefore specific to each of those funds. You only want to see that once in your document management system. You don't want to see it 10 different times. So like, how do you sort and filter and make sure that you still get access to that without seeing it duplicated over and over? So there are tools out there now where they're using machine learning and AI to go pull down that data and do the OCR and analyze that data. And I think if they took it to the next step, and some of them might be close, of really pulling out your exposure data and then normalizing that, then that's like a no-brainer in my mind, where there's a ton of value in that. It's a huge pain point, and then everybody's got access to the information without having to go digging.
It feels like we're at this moment with AI and data and OCR and pulling the data. Are you doing anything on the workflow front, which I think is the oil that drives the engine?
The short answer is no. We have ex officio, who we outsource in Charlottesville. That's invaluable to me. In terms of the data component and the workflow, so ex officio has their processes set up within Solovis where they use that as the workflow tool. I think that's one of the areas from an investment standpoint. A CRM has potential to be additive to our current process, where we've got a process in place now where we have an idea. The investment team meets twice a week. I join each of those meetings. I think that's really, really helpful for me to hear directly about what the thesis is, what the risks are when I'm going into ODD on a manager, but it also helps me in terms of managing the workflow and knowing where things stand, of where is this at a point that I need to start doing the ODD work versus it's still being iterated on. It's not quite ready for prime time yet. So I think that we've seen over time, there's just so many different ways that could be improved. Not to say that it's bad today, but I think that's where the CRM really could potentially help us in the future.
Love your thoughts on just how you approach these workflow tools and what integration means for you.
So I think about it in a couple of different ways. If you've got several different problems you're trying to identify or you're trying to solve for, you can either find one provider that maybe does all those things fairly well, or you could find best in breed for each one of those things, or some combination of the two. And the risk of one provider is that if they don't do any of those things exceptionally well, then that could be frustrating. The risk of different providers is that you've got to integrate the data together. So the best outcome in my mind is if you had best in breed, you have them all be able to talk to each other, pull the data in seamlessly, where you don't have a dedicated technology resource. That's one solution. I think a lot of the bigger shops, as you get bigger, they have that complexity and they do have that dedicated resource. That's just not where we are today. So that's one of the things that plays into the decision of, can we get the data out easily? Can we manipulate it or put it into whatever format we want to help with that consolidation easily? Or is this creating a separate source of truth potentially that we then have to always reconcile and be mindful of?
Anything else you're getting excited about in this area?
In terms of manager diligence, we've looked at a provider that helps pull together information about their portfolio. They can take it a step further to pull in company-specific information beyond that. I think that's really interesting. We've done some demoing with a provider that does analysis of partnership agreements. So I think that is potentially really useful too, to just have a tool to give you that quick analysis of, here are the key terms, here are the issues that we see, without maybe some of the cost and the time that a traditional review. I think to help supplement that, I think is potentially really interesting as well.
And then do you have outside counsel or inside counsel help with that right now?
Yes. Where I would say I spend a good chunk of my time when performing ODD is the legal review, where outside counsel reviews, the investment team lead for that investment will also review, and I will review. So I think the three of those things, one, the investment team can quickly identify what terms here are third rails to where it would be pause the conversation. The legal counsel is going to obviously have a little bit more nuance in terms of the legalese that goes involved. And they see so many more of these documents than we would ever see to really help tell us what is market and what is not. And then my review supplements all of those, pulls it together to then also identify, are there terms in here that maybe are not really impactful from a legal risk liability perspective, from an investment perspective, but have an operational impact? How long do they have to complete their audit? And things of that nature. Pull all those three things together. And then that really dictates, I would say, a third to half of the conversation through the ODD process with the manager.
Do you have your own standards? What's important for CIMCO?
I would say there's a standard template that our outside counsel uses that has most of those terms. So much of this really overlaps with ODD in my mind, because there could be a term that could be important, but if you don't have the context of the operating environment, you can get some comfort there. So I have a template that I use. There's also a template that the investment team generally uses to do a pre-ODD review to sort of look for those red flags initially. Then I'll use that, build upon that in my review, and also review what the legal counsel has flagged as potential issues or key terms, and then just make sure that all of those things synthesize together.
And then on the ODD review, given your audit and tax hat, is there anything unique that you do that maybe others don't do, or you think is more important than others?
I do think there's a wide array of approaches when it comes to ODD. There are some that want to meet in person with every manager. I do everything over Zoom. That's not to say the investment team is not meeting with the manager in person, but I think everyone has different things that they focus on. Some are really concerned about, for key service providers, they want to talk to each of those providers to verify the relationship. That's something that I find less value in. I think you can kind of see that through their public filings or through their audited financial statements. But if that's something that they're not going to be forthcoming with, it's going to be pretty obvious right away when you're going through the diligence process.
When you hire, one question, is it better to hire for like-minded organizations with a more focus on size? So if I'm coming in from a very large organization and I parachute into VCIMCO, is that a good fit for you guys?
I don't see why not. I think when you're coming from that mindset, you have to come in eyes wide open to what those potential differences are and be willing to work and understand that everybody's contributing to the same goal. And while the job is probably largely the same as what you did at the other organization, it's going to be a little bit different setup.
And you're generalist on everything, whether it be operations, investing.
Yes. People naturally have their areas of expertise and networking that they build over time. But yes, everyone is a generalist. There's no siloing. All the best ideas get put forth against each other. There's not buckets that we're trying to fill. We're not trying to track to an explicit benchmark. I think all those things really are beneficial to our partners in that we're really trying to put forward the best portfolio overall.
And then I have another question just back to working with the investment team and just any best practices or guidance you have for working with investment professionals.
I think the two things that I mentioned earlier, one, there's not one way to do things. So keeping an open mind of if somebody has an idea of something that they think might help us be more efficient, not to immediately shut that down. And then two is, and this is probably true for anybody, but it's really easy to identify problems, but it's much more additive if you can have solutions as well. So just being thoughtful about not always feeling like you have to have a fully baked solution, but when you see those problems to be able to, okay, here's a couple of different options. Let's work through this together to figure out how do we address this.
Well, Mike, this has been really insightful, and I love getting a little look into seeing how lean organizations run. And it's great to see how you guys are creating efficiency. I would love to close with two questions. I think one question I have is just what advice would you give to an emerging manager from an operational perspective?
I would just say, don't skimp on operations. I think it's easy in early days to potentially discount how complex and difficult the environment can be. So just making sure that you're being thoughtful about either bringing on that person internally to help through that process or finding the right providers to help with that. So a lot of the times emerging managers have experience from other shops that they've been at to where that's not a huge issue. But if they don't, or if they're uncertain, getting LP feedback is also really critical. So we really like to be at the table for those conversations when we can.
Excellent. And then the other question I have is what article, book, could be website, Twitter handle that you commonly refer to people in the business?
I would say most of my reading is really current event related or back to the AI theme. I find Perplexity for like general research just to be super helpful in terms of I could look for something rather than me going through 10 different results trying to find the information. I can get a summary and I don't really trust the summary. So I can look at where the source is and evaluate it there. And I just find it saves me so much time. So I think that would be the proponent for Perplexity.
Mike, this has been great. Thanks for sharing your time and insight.
Thanks for having me.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.